Global Dividend Investing Mastery. Most dividend investors make one critical mistake. They focus on finding better stocks, when they should be building a better system. Global Dividend Investing Mastery isn't just about dividends. It's about creating a global income strategy that can withstand inflation, market volatility, currency fluctuations, and changing economic cycles. Today, we'll break down every chapter, uncover the key lessons, and discuss how investors can apply these ideas in the real world. Chapter 1. Global Dividend Investing Opportunities Across Regions. What this chapter teaches. This chapter explains why limiting investments to a single country can create unnecessary risk and reduce potential opportunities. The world contains thousands of dividend-paying companies operating under different economic conditions. When one region struggles, another may thrive. Core lesson. Geographic diversification is a source of income diversification. Many investors diversify across stocks. Fewer diversify across countries. The book argues that both are essential. Key knowledge. The chapter examines Canada's stable banking and utility sectors, Europe's strong dividend culture, Asia-Pacific's growth opportunities, Latin America's higher yield markets, Middle East and African resource-based opportunities. Why it matters. A portfolio concentrated in one country is vulnerable to local economic shocks. Global diversification spreads risk and opens access to opportunities unavailable at home. Practical takeaway. Instead of asking, what is the best dividend stock? Ask, am I exposed to the best opportunities globally? Chapter 2. Hedging currency risk and inflation. What this chapter teaches. A high dividend yield means little if inflation or currency movements destroy purchasing power. Many investors focus on returns. Successful investors focus on real returns. Core lesson. Protecting income is just as important as generating income. Key knowledge. The chapter explores natural currency hedging, currency hedged ETFs, inflation-resistant assets, global revenue businesses, foreign exchange risk management. Why it matters. A 5% dividend can become far less valuable if inflation is high or the local currency weakens significantly. Practical takeaway. Always evaluate yield, inflation impact, currency exposure. Together, never separately. Chapter 3. Building a global core portfolio. What this chapter teaches. Many investors either become too conservative or too aggressive. This chapter introduces balance. Core lesson. Structure beats stock picking. A great portfolio is not built from random investments. It is built from intentional allocation. Key knowledge. The core satellite approach. Core holdings. 60 to 80%. Focused on stability, broad diversification, reliable dividends. Satellite holdings. 20 to 40%. Focused on growth, higher yield opportunities. Tactical investments. Why it matters. The portfolio structure determines long-term performance more than any single stock. Practical takeaway. Build your foundation first. Seek opportunities second. Chapter 4. Tax-efficient global dividend strategies. What this chapter teaches. Investors often focus heavily on maximizing returns while ignoring taxes. Taxes silently reduce wealth. Core lesson. It's not what you earn. It's what you keep. Key knowledge. Topics include tax-advantaged accounts, withholding taxes, tax treaties, foreign tax credits, tax loss harvesting. Why it matters. Small tax inefficiencies compound significantly over decades. Practical takeaway. Tax planning should be part of portfolio construction, not an afterthought. Chapter 5. Risk management. What this chapter teaches. The highest dividend is not always the best dividend. Many high yields are warning signs. Core lesson. Income without risk management is speculation. Key knowledge. The chapter discusses political risk, regulatory risk, currency volatility, liquidity risk, portfolio stress testing. Why it matters. Risk management protects investors from catastrophic losses. Practical takeaway. Always ask, what could go wrong? Before asking, how much can I earn? Chapter 6. Advanced Portfolio Techniques. What this chapter teaches. Once the foundation is built, investors can explore strategies to improve returns and efficiency. Core lesson. Optimization comes after diversification. Key knowledge. The chapter introduces smart beta strategies, dividend momentum investing, covered call income strategies, REITs, infrastructure investments, ESG dividend investing. Why it matters. Advanced tools can improve performance when used carefully. Practical takeaway. Master the basics before pursuing advanced techniques. Chapter 7. The 90-day implementation blueprint. What this chapter teaches. Knowledge without action creates no results. This chapter converts strategy into execution. Core lesson. Successful investors follow systems, not emotions. Key knowledge. The book provides days 1 to 30. Assessment and planning. Days 31 to 60. Portfolio construction. Days 61 to 90. Optimization and monitoring. Why it matters. Many investors spend years researching but never build a structured plan. Practical takeaway. Action creates experience. Experience creates confidence. Confidence creates long-term success. Final book lesson. If there is one message that defines Global Dividend Investing Mastery, it is this. The future of dividend investing is global. The book teaches that successful income investing is not about chasing the highest yield. It is about combining global diversification, currency awareness, tax efficiency, risk management, disciplined portfolio construction into one integrated system. And perhaps the most important mindset shift is this. Stop thinking like a local investor. Start thinking like a global investor. If you're interested in learning more about global dividend investing, Global Dividend Investing Mastery provides a practical introduction to international dividend strategies, portfolio construction principles, risk management considerations, and tax-aware investing. You can find the book on Amazon through the link in the description below. Read it, evaluate the ideas, and determine how the concepts may fit your own investment goals and circumstances.